What's up, guys? It's November 18th, 2024. Had that breakout on the the market broke out. Crazy sell-off. How many? This is like this is the day, and then I have to scrunch it up. I didn't trade, but 230 points. Wow. Hope you guys caught that leg down. Even like 10 points is great. Um, yeah, dang. The daily's still not updated for some reason. I wonder. We didn't have a gap up, right? Not that big. This is yesterday's price action. This is today's price action. So this candle should still be down here, and this bar should be. I wonder when that's gonna update. Why? It's weird that the higher time frames aren't updating, but the lower time frame is how it's supposed to be. Unless I'm confused right now. The 11th, 17. That was today. It was yesterday. Yeah, the 17th should be below the 16th. 16th, yeah. So, that will be cool to see where this bar actually. Whoa, hold on. We can actually see this. Where is this bar? Almost a gap fill. Wow. That is a crazy trade. I hope you guys caught some of that. Have to. Okay, so we'll talk about this price action up here, and then we'll get into that. How much is this range? Bar 2. 30 points isn't even that bad for coming off a range day. How many? So what? This was like 200 something points. So I'm just doing the math. How many 30 is going to do with a big number? That's a lot of. All right, guys. So let's get into it. Yesterday we had a gap down, sell off, rally, and we went sideways. Kind of had an end of the day sell off. Today we opened up where yesterday closed. Bar 81 is here. Bar 1 today is here. But let's look at the overnight price action real quick. Yesterday finished around here. Yesterday finished around here. We rallied, sold off in the open. I actually thought the open would keep selling, but then we rallied. Big down, big up, puts us in a trading range. So we opened right at yesterday's close, but there was a big down, big up. Nonetheless, yesterday we the day ended with a bullish breakout and a pullback into the EMA. So here's that bullish breakout, leg 1, pullback leg 2, and then bar 76 is still an inside bar. So leg 1, pullback, 2-legged pullback, testing the high of 73. And then we have a bull rally breaking out. 3, 4, 5, 6, 7. 7 bull bars in a row. The first reversal got bought. I thought this was a really nice trade, but I thought it was difficult because of the price positioning right below the higher time frame EMA. So yeah, I thought that was interesting. When bar 11 had this tail, I was like, ooh, I wonder what's gonna happen. But then we rallied. 1, 2, 3, 4, 5. Another 5 bars after bar 11. So this was a good leg 1, pullback leg 2, sell vacuum on a higher time frame chart, and then bars 17, 18, which I actually was surprised with this leg 2. Leg 1, pullback leg 2, and that automatically puts, now we have a big down, big up. The market's range bound. So what's the market cycle? The market cycle is breakout, first opposite bar, bar 8, starts the channel phase. Leg 1, pullback leg 2. You can't really see that leg 3. But the high of 11 right here is a trendline break. So you could say leg 1, pullback leg 2, pullback leg 3. That's an implied leg 3. This is a visible pullback. This is an implied pullback. And then we have a leg 1, pullback leg 2. Second leg traps are very common in ranges. Testing the high of bar 77 yesterday. Testing the breakout point of today. Rally leg 1, pullback leg 2, pullback leg 3. Bar 34 is a sell vacuum. It's a buy vacuum. When we're in trading ranges, it's common to see vacuums. So, and what's a vacuum? A vacuum is just a sudden, it's a vacuum. So a breakout has orderly bars. These bars is somewhat orderly, but they are a little bit not the same size, but they are relatively the same size. I know that sounds funny, but how can I say this better? A vacuum is, let me see a vacuum here. 19 vacuumed up and it sold off, whereas we look here and it's a little more orderly, and then it reverses. 24 breaks out again, like 1, pull back like 2, 30, excuse me, 24, 34 here is testing the bar 17 breakout point, and then it sells off and goes sideways. So now we've had a big up, big down, big up, little down, big up, somewhat of a wedge top. When we have a trend line break, 3 things can happen. So let's just say this is the trend. So this is the trend. You could say this is that. And then we have a pullback. And then we're looking for 3 things can happen here. We could pull back and go past the breakout point. My dog is gonna bark. I can feel it in my bones right now. He's acting too good. So we can go past the breakout point. We can go, oh, excuse me. We can go to the breakout point. And we can undershoot the breakout point. Whoa. So just because we have a strong trend and a breakout, a trend line break, doesn't necessarily mean we're gonna shoot past. I always used to think the first option was like a no matter what thing, but that's not the case. There's 3 options, 3 things the market can do, and of course the market can also reverse. These are generally the 3 things we're gonna see after a trend line break. Make this a little nicer looking. Okay, so after a trend line break, so here leg 1, pull back leg 2, pull back leg 3, and there's fractal price action within here. We can see this is my preferred right here. This is what I like to see, this one, and that's what I always used to think would happen. Leg 1, pull back leg 2, new high. But you know, time has passed, and now we can have a leg 1, pull back, same height, option 2, or we can have option 3, leg 1, pull back, lower high, and it reverses. Of course, there's always the option of it just straight up going like this and then going straight down. This is the more rare occasion. Usually V reversals don't happen, but if you were to see a V reversal, I mean, here is a V reversal, 34, 35, 36. This is a vacuum on a smaller time frame. We could see, which is still technically this option, just the 4th leg drawn in. So there's always some options here. Just because we have a strong trend, could be a vacuum, and then we get this lower high. So today we got the 3rd option with the leg going down like this, that being the breakout leg here. Those are the options. Is there a way to delete all this in one? I guess we can't. Something to keep in mind. It is hard to think like that and when you're actually in the trade, but that's the point of these reviews, and I hope you guys do the reviews too, is that we just keep talking about it over and over again until it doesn't matter. Flat in a trade, looking for a trade, you know there's 3 options here. There's 4 options, 5 options. Those are 3 options that could happen, and we got the 3rd option that was right here. So leg 1, pull back, leg 2, leg 1, so strong pull, buy vacuum, deep pull back, leg 2, sell off. Within this leg 2, we have 3 legs still. Leg 1, pull back, leg 2, pull back, leg 3, wedge top, lower high, 36, reverses, and now the market is in a TTR until the breakout. The market was in a trading range pretty much from, I mean, you could say the market was in a contracting triangle too. The daily time frame has been in a triangle. I wish that bar was a little bit lower just so you guys could see. Actually, I had these lines drawn out today, just taking peeks here and there. I did this like that. Then I had this like that. Just to like, I had it scrunched up and I was like, which way is it more likely to go. If you guys have seen the previous videos, I talk about that method. Ali talks about momentum, how generally when we have a trading range, you think of a gun and it keeps the momentum. But today, I've also said it in a lot of other videos, leg 1, pull back leg 2, pull back leg 3. Final flags and trading ranges typically reverse, so there's that price action reason. That was a news bar, but I don't even care. It's price action. That covers about the first half of the day. I think this was a great tradable leg. I think this was a great tradable leg. This was the harder leg to trade for sure. And you could have a limit order below 17 to catch these bears made 1R very quickly. Within 1, 2, 3, 4, 5 bars, they made 1R. So they're going to come back for seconds, and they got that second here, bar 30, scalp out. You can short the high here. That's definitely the harder trade. It's a medium driven trade, but I mean, the bar's printed, so that's what happened. Let's talk about this one. This breakout. What the heck? I wish. How can we make this? So let's do this first. I just cracked my knuckles. Triangle, breakout mode, 5 pushes, leg 1. 1, 2, 3, 4, 5-ish. 1, 2, 3, 4, 5, bar 49. 54, double top here, sells off, you catch that sell. Maybe you scalp out at range lows, I don't blame you. But then what is this bar breaking out of? What is bar 55 breaking out of? It's breaking out of all of this. It's the biggest bar within all of this. And then once we see bar 56, we see a huge 2 gaps. Biggest gaps, and you can't even say that's late in the trend. This is literally the beginning of a trend with 2 gaps. So bulls have some serious work to do if you're looking for a reversal. Leg 1, pull back. No trend line break until we get to about there. Hold on. So here we have a trend line break. So bar 59 would be, so this would be the first leg, the spike, opposite bar. I'm talking about the market cycle now. Same market cycle we talked about right here. Breakout, pullback, channel, leg 1, leg 2, sideways. When we go sideways, that's the end of the market cycle and we're waiting for a new breakout. We get that new breakout here between 55 to 58, pullback, bar 60, and we channel pretty. I mean, yeah, there's no trend line break actually. Let's just see real quick just to make sure. No. So what I'm looking for is to see if this candle breaks that candle's previous high. No, 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 no. Bam, right here. You see, this is the first trend line break. So that's the start of the second leg. Excuse me, third leg. And of course, you can always count opposite bars if you want to as well. There's multiple ways to count leg count. You can't really pick one or the other. You just have to be cognizant of both. And then we get that. So here. And then obviously bars. We can see that bar 76 breaks this 75 high. So there's your 3 legs. Leg 1, pull back, leg 2, pull back, leg 3, pull back, leg 4. Or you can even count opposite bars. Leg 1, pull back, leg 2, here, opposite bar, pull back, opposite bar, pull back. I said that backwards. See, I said that a little too fast. So leg 1, opposite bar is a pullback. We have another leg 1 here. Leg 2, opposite bar is a pullback. Sell off, opposite bar, sell off, opposite bar. You have to know both. You just have to know both. You can't pick. I've tried several times to decide which one do I want to do. You can't really do one or the other. You gotta just be very cognizant of both. My buddy for like a year has been telling me to invest in crypto, and I'm like, no, I don't do crypto. I don't do crypto. Blah 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 blah. And then finally, I just said, screw it. I put 15 bucks in, and it's already at like, I just looked at it. It's already at $12.75. I'm like, bro, this is so stupid. I just don't like crypto. It's just like gambling. I guess the whole stock market is kind of gambling. Let's go over the measured moves and I'll draw on the gaps because there's a decent amount of gaps today. 5 bar micro channel, 1, 2, 3, 4, 5. Looking for 1 to 1 of that. almost 1.5 bars met, just shy. I think if you feel bad about holding all these bars, just be okay with it because the probability of a pullback increases every single time you get a bar in that direction. So what do I mean? So we have 4 bars. Okay, the probability for a pullback increases 5. It goes even higher and higher and higher and higher. I typically try and get out between 3 to 5 bars of a winning trade, but you have to decide, you have to figure out statistically how many bars go in your favor before the market pulls back. That'll depend on how you trade, what you're looking for. You know, if the market's in a range, it might pull back faster. If we're in a trend like today, you might be able to get a few more bars. Look here, 1, 2, 3, 4, 5. 1, 2, 3, 4, 5, 6 bars before pullback. 1, 2, 3, 4 before pullback. 1, 2, 3, 4 before pullback. About 20 minutes per trade. So you got to see what the rhythm is and decide like what is the commonality for you and your trade. Excuse me 1 second here. So yeah, you have one trade today here. We have the micro channel pullback. Go for the second leg. I love trading second legs. There's another trade here, but it's not 3 bars. It's not a trade I would necessarily take. You short the high here, 1.5 R equals the EMA. I would try and buy around here, but bar 24 kind of races up, and then 25, it's hard to say. Is this going to be the start of a second leg or a pullback? We are above the EMA. Bulls have bars, you could say, starting at 3 or 4, all the way up to 16. So what, 3, 4? That's about 12, 13 bars above the EMA. First touch is usually a buy. The bars 20, 21, 22 became a very strong sell, and it was growing. So that's a precursor to that we're not in a bull trend because you don't have sell-offs like that in a bull trend. So yeah, I think you could go for 1-to-1 here, but that's not 3 bars. A 5-minute bar closing on its high is 3 bars on a 100-second chart, and that's a fractal play. You could get 1-to-1 here. We have 4 bars here, but look at the tail, so that's not a good short. This is 150% pullback. 150% pullbacks happen in trading ranges. Bar 35, 36. 4 bars here. You could look to get short here, but we have the higher time frame EMA acting as support. By the way, this is a 20 EMA on the 5-minute chart. This is the 45-minute EMA. This is the 20 EMA 45-minute. This is, I don't still to this day don't know how to say this. This bigger blue line right here, it's the 20 EMA. The length is a 20, the time frame is 45, and it's plotted on the 5-minute. So that's that. And now we have a spike and we have that breakout. Customary to go for a measured move. Spike starts at the high of 54. 1.5 R's met, and clearly almost 3 R's met. Let's see. So just because it looks a little confusing. 1 R, 2 R, 3 R. Oh, did I count that right? Let's just do it like that, just to guess. 1 R, 2 R, 3 R, almost 4 R is met with this breakout. So you guys caught that. And if you didn't, don't feel bad. This is a hard trade. I was measuring some of the bars. We went from having like 2.2, 3-point bars to having 20-point bars. So think about how wide your stop is going to be. 2 micros is almost a 200-point stop. So you have to trade very small. Depending on what you trade size, trade like 1/10 of that, 1/20th of that. But yeah, so here's that breakout. Short the first pullback is a good short right here. And it sells off. And you could also trail your stop. You wouldn't get tagged out to all the way here. If you shorted the first pullback, you would make 64 points. And the market still kept going, guys. Jeez. Don't feel bad. Because we trade around the market cycle, right? So it's always going to come back. Maybe not this size of a breakout, but how often do these breakouts happen anyway? So if you're playing for consistency, don't even feel bad. And yeah, another one. I mean, any measured move is going to work. 1.5 R's met. So let's try on these gaps real quick. Coming up on 20 minutes. I try and keep these around 20 minutes for you guys. I know you're very busy. but I still want to get the idea across. I think today a good takeaway would be just to understand the three different types of things we can encounter after a trend line break. You just add that to your stack of price action trades, tips, knowledge, and over a year or so, you'll start to see it unfold while you're in a trade. That's ultimately the goal, right? I mean, talking about printed chart is one thing, and then trading a printed chart or trading an unprinted chart is another thing. You know, I'm guilty of it. I definitely sometimes forget simple things like where are we in the market cycle, and I buy too high, and that's the whole point, is to just keep drilling it down until it's subconsciously. My leg counting is getting a little more fluid. I am big on leg counting. I really like gaps leg counting and where we are in the market cycle. It keeps things simple and consistent because they happen on a daily basis. So if you find what works for you and stick to it, and don't be afraid to switch up after a decent amount of tries. Just because you're red one day doesn't mean you have to change your whole idea. Give it a few months. Give it some time to bake into you before you make the conscious decision to be like, you know what? This guy doesn't know shit. So yeah, there's the gaps. Big day. I have no clue how I'm gonna screenshot this. Hope you guys do good. Hope you guys had a good one. I'll talk to you guys tomorrow. It's Christmas next week. It's a short week. We're not trading on Christmas, and then the other 4 days are open. I will most likely be trading tomorrow. Next week. So I'm pretty stoked to get back in the markets. Been working a lot, just trying to get some Christmas presents sorted. Hope you guys have a good one. I'll talk to you guys later. Merry Christmas, everyone. Thank you for your time. And if you learned something, share the show.